Welcome to Yahoo Finance's morning brief. It is Monday, February 20th. I'm Julie Hyman, and you may see I am not in our studio today. We have an historic blizzard going on in the Northeast. So along with some other 35 million or so Americans, I am stuck under a blizzard warning here. And of course, the Northeast is largely shut down, from modes of public transit to New York City being under an emergency where cars that are non-emergency vehicles are not allowed on the streets. So it's a pretty extraordinary situation. Let's get a check on markets, on futures here as we get underway this morning. Wouldn't be shocking to see lower than typical volumes on this snowy Monday. People, of course, can trade to some extent from home, but nonetheless, a lot of folks not making it into and onto their New York City trading floors this morning. Dow futures indicating a drop of nearly 200 points at the open this morning. S&P futures off 1/3 of 1%. Nasdaq 100 futures indicating a drop of 0.5%. All of this having to do with the Supreme Court's overruling of President Trump's authority to impose tariffs under IEEPA. Over the weekend, of course, he said, well, let's do 10% universal tariffs. Then he said, well, never mind, let's do 15% universal tariffs under other statutes. So there is renewed confusion over what this affects, who it affects, how companies are going to deal with it. We're going to talk much more about this in just a moment. But first, I do want to talk a little bit more about the storm that we are seeing and the effect that it is having, in particular on travel. Of course, it's affecting flights up and down the East Coast and across the country because of the ripple effect. 13,000 flights and counting are either delayed or canceled, particularly here in the New York area. 2/3 of flights out of JFK and LaGuardia were canceled yesterday. And of course, there's going to be more here on Monday. It is still snowing. We've got at least a foot of snow, and it is still snowing. And of course, the National Weather Service has said that travel is dangerous because of reduced visibility. Not only is there a lot of snow, there are heavy wind gusts. So that is affecting visibility as well. Airlines are basically waiving change and cancellation fees right now. And the last time that we saw a big storm, which was Fern, we saw a hit to some of these companies' bottom lines. For example, for American Airlines, the storm cost $150 to $200 million in revenue. So we'll be looking for any kind of material impacts. And you tend to see a wider economic impact as well, although some of that is displacement. In other words, some of it is money not spent today that does get spent tomorrow, but I'm not having lunch, my typical salad in the city today. And that is not revenue that is coming back for the salad joint. So there are effects on airlines, and there are effects, of course, throughout the economy as well. Let's get to the big tariff story that we have been watching throughout the weekend. President Trump's tariff authority, as I mentioned, thrown out by the Supreme Court, but he has stepped in immediately and said, well, we're going to impose 15% tariffs universally. Our Washington correspondent, Ben Worschel, is joining me now to talk more about all of this. So, Ben, as I mentioned, there's still a good deal of confusion here about what happens now. This new tariff authority, as I understand it, lasts for 150 days under these other sections, these other statutes that the president is using. So what do we need to know about that and what these tariffs look like?
Yeah, so you're right, Julie. This 15% tariff that Trump announced over the weekend has a time limit here of 150 days. That gives us sort of until late July, where this new blanket rate of 15% will be in effect. It actually doesn't formally go in effect till tomorrow, so it's from the 24th of this month until July 24th, where this new rate will be. It's a new kind of one-size-fits-all approach from Trump to kind of replace these varied emergency tariffs that were struck down last week, and have created some clear winners and losers at the national level. But the overall direction here is a tick downward. The estimates here are that these new 15% tariffs will bring in about 70% of the revenue that the IEEPA tariffs, the ones that were struck down, would have brought in over this 150-day span. That's according to the Tax Foundation. And in an overall rate here, going from 16% to 13.7% once these new tariffs are in effect. So a slight downtick, but there's a bunch of countries, especially in Europe, I would note, that are protesting because they're kind of losers in this, and they could see their rates increase.
Right, because basically they had the framework of the trade deal with the US, right? The EU, for example, other countries as well. And there were certain things that weren't subject to tariffs at all. And so do we even know yet what, how the new rules are going to affect those items?
Most of the items that had their own tariffs before that were either excluded from tariffs or had their own rates, those are unchanged. Automobiles, semiconductors, pharmaceuticals, things like that. They have their own tariff authority. It's called Section 232 tariffs, and those are unchanged, and those are excluded from this 15% blanket tariffs. I'd also note that USMCA goods, trades between Mexico and Canada, have a lot of excluded goods, which are also excluded from these 15%. That's why you see a 15% global rate, but the effective rate is lower than that, about 13%. The countries that are having a real problem with this are the ones that struck kind of the best deals going forward. The United Kingdom is the major one here. They were first out the gate. They were praised by Trump and his team for negotiating early, negotiating often, and they're the ones that could see their overall rates increase the most in the when these go into effect this week. Europe is in a similar boat, a sort of 1% increase in France and in Italy and countries like that negotiated a lower rate, and I would add offered the most concessions early on to kind of get a lower rate. On the flip side of this, perhaps ironically, some of Trump's biggest antagonists in the trade world, China, Brazil, Mexico and Canada to a certain extent, are going to see their rates decline. Brazil is probably the most stark example. Their rate is expected to be more than halved because a lot of Trump imposed emergency tariffs there on a variety of issues with Brazil. So those are gone. Similarly with China, US, Canada, and Mexico over fentanyl. Those are all wiped away, replaced with this 15% tariff. So they're going to be lower, even though they're the ones that have kind of sparred with Trump the most over the last year.
And Ben, one of the other big questions is whether companies who have paid tariffs are going to get their money back, right? And this is something that legal experts seem to say, according to the Supreme Court, they should just get their money back. But the Trump administration has indicated they're going to have to fight for it.
Yeah, I think there's a widespread agreement. Trump's formulation here that he offered Friday is that it's going to be about 2 to 5 years of litigation here. That's how he put it on Friday. And I think that's the widespread expectation here of sort of how this tariff refund process is likely to unfold, with a lot of legal wrangling and a lot of legal costs, I would add. It's notable that Trump and his team could simply set up a tariff refund process. They have the power to do that. That would be the kind of assumption here, but they're clearly not interested in doing that. They're kind of throwing up their hands, saying that this is up to the lower courts to decide, which means a whole lot of different lawsuits going back and forth here. I think it's going to set up a real calculation here for companies about whether this is the cost benefit analysis here. This is years of litigation. This is years of cost to get this money back. And so there's a lot of questions here about how many companies are going to pursue it. Some already have. Costco is an example of a country that preemptively filed a lawsuit to get here, so they could be kind of early in line for refunds. But it's clearly going to be a long process. There's no checks going out this week, this month, even is expected. It's going to be a kind of drawn out process where basically the Trump administration fights tooth and nail as much as they can. That's what they're signaling. And the companies try to get as much as they can through legal means here.
Ben, thanks much. Appreciate it. When we come back, we're going to talk about another big issue that is that the U.S. is going to be striking Iran. We'll talk about that and the effect on the energy market next. Times, one potential plan could be a sort of initial warning strike to get Iran to agree to U.S. demands regarding its nuclear plans, and then potentially a larger strike at some point. This has had some ripple effects around the energy markets, or at least anticipated effects in the energy markets. To talk more about the energy markets, I want to bring in Rebecca Babin, CIBC Private Wealth Senior Energy Trader. Rebecca is snowed in like I am, although in a different part of the tri-state area. Rebecca, before we get to Iran, I do want to quickly ask you about this big winter storm here. Man, it has been a winter, hasn't it? And we are seeing some effects on the natural gas markets. Can you talk me through that and what you expect?
Okay, so for natural gas, really what we're seeing is we've had a very severe winter, as you mentioned, not just in the US, but across the globe, it's been significantly colder. So we've had an increased demand pull, while at the same time we've had freeze-offs that took place in January due to the cold weather. So it was a kind of a impact where in January we had this massive demand spike with a supply withdrawal, and we saw that huge rally in nat gas. That has since reverted back to around where we are at the moment at $3 Henry Hub. But at the same time, we're super weather dependent, and demand obviously increases during these periods of the storm. I think also a consideration here that shouldn't be completely ignored is the geopolitical factor for gas and LNG. The Strait of Hormuz does carry 20% of the world's oil, but it also carries a decent amount of LNG through the strait, which can impact European gas prices, which has a knock-on effect to US gas prices. So there's a lot going on. Most importantly, it is weather related. It comes down to how much demand we have due to the cold weather and how much supply is impacted. And then there's the kind of undercurrent of geopolitics in the background as well.
Gotcha. And this time around, at least, it's not expected to stay as cold for as long. So hopefully that will, be a little bit of an easing pressure for prices. So you mentioned geopolitical and what could be going on in the Strait of Hormuz. How are you thinking about this, and because we don't know exactly what a strike on Iran could look like, even if it does happen. So how do you sort of game out the various scenarios?
Well, I'll tell you this, the crude market has been in a headline blizzard since the start of the year. So we've had tough weather to deal with in real life, and the crude market certainly is feeling the same. So when we think about the Strait of Hormuz, obviously this is an extremely important choke point for crude oil transit, not only for Iran, but for Saudi Arabia, UAE. And it could have a meaningful impact on crude prices should there be friction within the strait. It doesn't need to be entirely closed to create a spike in oil prices. There just needs to be the fear of a potential attack, similar to what we saw in the Red Sea with the Houthis. Now, this is a very low probability by the market's estimation that we do see the Strait of Hormuz come into play. It's a non-zero event that has a major impact on prices. So although we see a less than 10% chance that the Strait of Hormuz is impacted due to this conflict, if it were, the impact on prices would probably be in excess of $10 to $15 in crude price. So when we think about it, even though we don't think this is this event we don't think this is the direction that either side really wants to head towards in terms of causing a conflict that involves the Strait of Hormuz. If it does, there's a real impact. So you have to kind of take into consideration what that means. And what it means is Iran is no longer able to export as many barrels to China. What it means is Saudi Arabia isn't able to export as many barrels to China, and China's likely going to be a bit frustrated by that. So, keeping that in mind, that's why the probability of a Strait of Hormuz event is so low, is that it impacts so many other countries globally, and it brings other countries kind of into the fray of this conflict, which I don't think serves potentially Iran or the US. So low probability, high price impact. If we look at military action, we might be looking at something that targets either military bases or along those lines before we get to a Strait of Hormuz event.
I mean, what's interesting too, Rebecca, is that if you look at the background of the oil market, for example, Goldman Sachs, the commodity desk over there, just raising its price targets for Brent and WTI, sort of ex-Iran. And indeed, we've seen this rally this year in oil prices that at least not a lot of people I was talking to were expecting, because it looked like we had a lot of supply out there. So what happened this year that kind of changed that scenario?
So that's a great point. And Goldman's not the only one raising their target this morning. Morgan Stanley did also, again, ex geopolitical events. And I think this is the setup. Everyone was expecting 2.5 to 3 million barrels of surplus coming into 2026 for the first quarter, at least, if not for the whole year. That's a pretty extreme number. What we've seen is the weather that we just discussed for nat gas also impacted crude production in the US. We had Kazakhstan have a fire in one of their power plants, and that impacted crude supply. We've had the CPC pipeline that was supposed to be coming back up in early January delayed. So we've had a supply event outside of geopolitical risk that has taken supply down, and demand has actually been fairly robust. Cold weather, more demand for heating oil, etc. So the surplus that everyone had been pricing in to get to those price targets in the mid 50s, which is where they were before they raised them this morning, you needed to see those inventories really building. And the inventories just haven't been building in the OECD centers. There is a lot of crude on water. But if we think about that, is that really something you can translate into feeling like that's inventories that can be drawn on quickly in an event to meet a demand spike or, a supply gap? Not necessarily. And then the other thing is China has continued to stockpile a lot of crude at the start of the year, keeping those surpluses out of the visible inventory centers. So that's why we're seeing those price targets come up. But the bearishness was so pervasive, Julie, coming into the start of the year that I'm not surprised we're seeing that. And $60 targets are not extremely high. 55 was, I think, kind of an over bearish estimation coming into the start of the year.
Gotcha. Rebecca, it's always great to get your perspective. Thanks so much. Appreciate it.
Thank you.
Well, crypto continues its volatile run, of course. The industry awaiting progress on the legislative front with the Clarity Act. But Yahoo Finance's Josh Lipton talked to Brian Dobson, Clear Street senior research analyst, about potential opportunity in digital assets, particularly on the infrastructure side.
We're going to start here on Bitcoin. We're hovering just around 67,000. Maybe get your thoughts there. Like, what explains that, Brian? Sentiment? Is it fundamentals, macro, a mix?
Well, sentiment's turned decidedly risk off, and there's been a lot of fear entering the market, right? I think Bitcoin specifically certainly trades closer to AI and tech names today than it did, a year ago or 2 years ago. And in addition to that risk-off rotation, you're also seeing a lot of people who were playing Bitcoin for, call it the play against fiat currency, instead enter trades in gold and silver, which have been very popular over the past, 3 to 6 months. So I think that's putting some pressure. That incremental buyer isn't there, and the shorts are having a field day going.
Do you see catalysts then ahead on the radar next 6 months, next 12 months?
I think the catalysts ahead of Bitcoin are the catalysts ahead of tech, and call it like disruptive tech in general, which is that over the course of the next 2 earnings periods, you're going to see some reassurance from management teams about demand for AI infrastructure, about demand for technology, and I think you're also going to hear corporations talking about how they've levered technology and AI to make themselves more profitable going forward. And then you'll see a return of the risk on trade. When specifically that will happen, I'm not sure, but I would expect more positive data points over the course of the next 6 months.
You might have thoughts on this. Sometimes you'll hear Bitcoin skeptics, and they'll say, listen, if you want to trade Bitcoin, hey, it's your money, knock yourself out, man. But they'll say, just realize, this is how they'll put it, they'll say, there's no actual investment merit here. They'll say there's no sales, there's no cash flow. It doesn't play any kind of meaningful role in the economy. What do you think about that argument?
I mean, my response to that is that call it all real money, right? Yeah. Be it gold or other, long-standing terms of real non-fiat money are valuable because people have gotten together and decided they are valuable at a psychological level, right? And you're seeing that forming around Bitcoin, right? And certainly the coin has been around for a long time. Now, I do think that there are miles and miles of lesser coin that will be washed out as the sector evolves. But Bitcoin will be here to stay through time.
Let's get to some themes you point out, because I like these. Crypto, you say, is becoming financial infrastructure. What does that mean in plain English? Can you explain that to us?
Yeah, that's right. It's not just Bitcoin when you think about crypto. It's also stablecoin and other forms of transactional crypto coin. So these crypto coins have significantly better settlement times than traditional money transfers, and they allow people to store wealth, to move wealth, and to track it very, very specifically on the blockchain. So from my point of view, the adoption of crypto assets, stablecoin and Bitcoin, is accelerating. You're seeing more corporations use it, and you're seeing more financial institutions build out the plumbing to facilitate those types of transactions.
Let's talk about some names you like, ways to play it, you think. Bitco, you say, is a buy. Now, this one's interesting, Brian, okay, because you look at this stock, We're down about 40% from its opening day close. I guess, why are we down 40%? Explain that, and then walk us through, okay, why you say, you know what, that's actually an opportunity.
Yeah, so I think that sell-off is largely overdone. The stock's down about 40% since it came out. The Nasdaq's off around 4% over the same period of time. And I think what you're seeing is that BitGo was tossed out with the rest of the bathwater in the, call it, high beta crypto names, right? But when you look at BitGo and you look at the earnings pathway over the next 3 to 4 years, what we see is 30% net revenue growth and 60% EBITDA growth on a per annum basis, right, on a CAGR basis. So what that tells us, or what we're describing there, is that the company is able to leverage its operating structure, and it's doing that by pulling in, additional stablecoin revenue. They're doing more custody as firms look for, call it, highly regulated custody of their crypto assets, and they're also getting into stablecoin. So for us, we see a lot of leverage there. We see a tremendous amount of earnings. And it's a buy. We see upside to $18 from these levels.
So crypto, you say, becoming financial infrastructure, right? AI, you say, is becoming, you put it like this, power infrastructure. Walk me through that thesis, and then what are some ways to play it, you think?
Yeah, that's right. So we cover a good segment of Bitcoin miners that up until recently were really just mining coin. And these companies existed not because they were true believers in crypto, but rather because they sought to monetize megawatts. Going forward over the next, call it, 5 to 10 years, the best monetization of megawatts for a data center will be through AI infrastructure buildouts. And that's what these companies are pivoting to right now. So we like Hut 8, we like Riot, we like Cypher, and we like CleanSpark.
Any kind of broad risk to that thesis? AI demand cooling, or execution risk, or I don't know, overbuilding?
I think that the key risk to the AI build-out thesis is the inability to procure power in an area that has fiber, cooling, and access to a major metropolitan area. Now, these Bitcoin miners that I mentioned have all of those aspects going for them, so we see very little risk for future build-out of data centers.
Brian, as always, great to see you. Appreciate your time and those picks. Thank you, sir.
Great, thank you.
We got the opening bell coming up in just a few minutes. That does it for Morning Brief, but opening bid is next with Brian Sozzi, and I'll be back at 10 a.m. with Market Catalyst. Keep it right here.
Monday here in New York City, and just to address the obvious, I'm coming to you from the basement of my house because I'm in Long Island, New York, and there has been a lot of snow. I haven't been outside just yet, but I'm thinking it is almost 2 feet of snow where I live. But that's not going to stop me from talking about stocks. It's a big week for the markets. Of course, we had that Supreme Court tariff ruling on Friday. We have NVIDIA earnings coming up on Wednesday. I just dropped an article on Yahoo Finance talking about how cheap the stock looks relative to many other big tech companies. So there's a lot to get to, but I got to start on that Supreme Court tariff ruling here because the market remains very much focused on this and what could happen next here on the tariff front. I want to bring in my friend Bill George, former Medtronic CEO. Bill, always here for me on complicated topics such as this. Bill, good to see you here this morning. Love to get your take on, right off the jump, what should CEOs be doing in this backdrop? They were already confused on the tariff front. Now they had this tossed on their plate. I feel as though they're like waiting for the next shoe to drop.
I think CEOs are going to hold off waiting for some form of clarity, which they're not going to get. This is chaos reigns. President Trump missed a golden opportunity to reset his economic policy around investment in jobs instead of tariffs. The tariff policy is not working. And, our balance of trade hit an all-time high. If he thinks that's important. Jobs are kind of muddling along. Inflation hit a high for the year of 2.9. So I think we really need to refocus on the economy. He had an emotional response. He should have stepped back for a few days, considered his advisors, and then decided, hey, this is an opportunity for me, State of the Union coming up. I'm going to get American companies start investing again. If I were a CEO, I'll tell you, I would hold off because I have no idea what the tariffs have. They changed 6 times in the weekend. So I have no idea by a country what it is. So I can't even run the numbers. I don't know whether to invest in the United States or a factory overseas, how much to ship, how much to import. It's chaotic. And that's the last thing. Business people want 2 things, Brian. They want predictability and stability. They get neither. So I think they're going to hold off. And I think the big investments, let's face it, have been in AI. But the rest of the economy, companies are not really investing.
Bill, is it too much? Is it too much of a stretch to call? I mean, you ticked off some very important things. Economic growth has cooled. Inflation is still, I don't think it's come down as fast as the president would like. Is it too much to call this a Trump slump?
I think that could be coming ahead in 26. Now, they've got some, in the big, beautiful bill, they got some tax benefits that will flow to people. So you're going to see investment from the top. But I worry about this K-shaped economy. All the people on the bottom are going to be suffering, and they're not going to have jobs. And companies are not going to be hiring a lot. They're going to hold off, see what happens with AI and what happens with tariff policy and investments. So I think you'll see, frankly, the job increase looked great last month, 130,000, but 120,000 of that was in healthcare and private education. Manufacturing overall for 25 was way down. So I don't think the Trump policy of trying to pressure people to invest in the United States manufacturing, particularly low end, is going to work. High end, yes. High tech manufacturing.
Bill, you think the markets are too optimistic still on the Trump economy? And we're talking about tariffs are still in place. They're still out there. Prices haven't come down. Companies are still passing on these tariffs on to consumers, like our stocks. And you look at the market, and the market's still trading at record highs.
Mag 7 is pulling it up, and I think that'll continue. I think you'll consider a huge, it's almost unfathomable how much investment they're making in things like data storage. And this is going to have a big impact on energy costs and energy availability, frankly. But I think you're going to see continued heavy investments in research and AI that will keep the economy going at the top. But what's that say to the small manufacturer? And how is that manufacturer going to compete in this economy? That's what worries me. And people that have to import all their components from overseas, they don't know what the cost is going to be and what the tariffs are going to be. And they don't know if they're going to get refunds on the tariffs they paid last year. So I think we have a chaotic situation.
Bill, so much of the president is really focused on bringing back manufacturing to this country. So many announcements on getting companies to announce new manufacturing, overseas companies like Taiwan Semiconductor building plants in this country. But if these trade deals completely fall apart after these tariff rulings, can the U.S. manufacturing revival, can that continue?
High-tech manufacturing will, Brian. Yes, I think the semiconductors under the CHIPS Act will continue to build AI, data storage. Yes, huge investments there. But no, low-tech manufacturing, we're not going to bring those jobs back. That's what the jobs are. Frankly, you're focusing on the wrong sector of the economy. We're a service economy. Manufacturing accounts for 8% of the jobs in the country, maybe on the decline further, much like agriculture in the 1950s. So I think you should focus on the high-tech manufacturing, but that'll be highly automated with few employees. You're not going to have a lot of jobs added. So the question is, where will the jobs come from? And then you get to the white-collar jobs and AI, and that's a big, big issue. That's unresolved. And I think the best hope for the U.S., frankly, is entrepreneurship, where we dominate the world with innovation and keep that going. Clearly, we dominate in AI, but I think those opportunities is where companies will focus, and that's where the new jobs will be.
How concerned are you that AI is going to really wreak havoc on the jobs market? Every day, we're getting a new update out of Claude. OpenAI is still out there trying to raise gobs and gobs of money. AI is just getting more powerful, and the human worker, it just doesn't seem like they are getting more powerful. They're getting less powerful.
I think that's true. And it's not just human workers. I mean, people with MBAs coming out of school are having trouble finding jobs. So starting jobs in law firms and brokerage houses and investment banks are declining rapidly. So the question is, where are talented young people going to start these days? That's a big issue. And I think you're going to see them focusing much more on entrepreneurship, founding companies. And hey, that's a good thing, because everyone's thinking about AI efficiency. Well, I think that's table stakes. I think you just have to do that to stay equal. If you want to get ahead, you figure out how AI can create a whole new business model in the same way the Mag 7 did 30 years ago. You create new business models and you'll be the winner. That's where the opportunities are. That's where the jobs are going to be for the creative, innovative people that I can see.
Let me get back to the tariff issue. So let's say you were still running, you were still atop one of these publicly traded companies, Bill. On a day like we saw on Friday, do you create or revive this tariff war room?
This tariff what? I missed that.
War room, where you get, you have executives in there, you're spending the whole
Absolutely
weekend going through trying to figure out what this stuff is.
Yeah, absolutely. But it's going to change every day. You got to have a war room. It's going to change. It changed 6 times over the weekend. So who knows what it's going to be? And so, yeah, and I think your supply chains, you sit down with your procurement people and you look at all that and you say, where are the opportunities? How does this change things? Should we buy from Vietnam? Should we buy from India? Should we buy from China? What's the deal? Or do we try to manufacture here in the U.S.? But I think in terms of the big dollar investments, that's where you're going to see people holding off, because business people don't want to invest when they don't know what the numbers are and there's so much uncertainty. So that's my great fear for 26. There's plenty of money out there for investment. That I can tell you. The liquidity in the economy is very powerful. So you will see investments, but the question is, where will they be? I hope they'll be in new companies, because that's where America dominates. There's no country in the world that can create new companies like the United States. So that's why you're going to see a lot of concentration. And I think the big tech companies will continue to invest heavily. I don't see any cessation there.
If you are a leader, Bill, should you just not expect refunds from these tariffs? Is that just a pipe dream?
I'm not putting them in my P&L, but I'm going to fight like heck to get them. Apple, for instance, has $3.6 billion out there. Their shareholders will be irate if they don't fight to get that back. So I think you'll see that. I think the ones that will be hurt by this are the small manufacturers. Hey, they've been hurt all along. What are we doing to revive small manufacturing in the United States, who has to import a high percentage of its cost of goods from outside the U.S.? They're the ones that are hurt. And so this whole tariff thing is redounding against us. By the way, there's another major factor here. The president sees this as using power over other nations. Really, it's foreign policy, Brian. But I think the real issue is you're seeing a major shift in trading patterns. For instance, France just made a big deal with India on AI. You're going to see other countries. Canada is already trying to shift its supply chains to Europe instead of the United States. That's a big issue for American manufacturers. If countries don't trust the United States in general, how are the manufacturers going to do business? How are they going to export? And I'm very concerned about that, because I think you'll set up a very long-term shift away from U.S. dominance of the global trade. And I think people will find ways to trade others. Surely the Europeans will do that within Europe. And I think you'll find more of the Asians doing the same thing. And guess who the winner in all this is? China. China is going to come out as a winner. They now can say, oh, we have a stable situation. We don't have chaos. Here's what you can predict from China, and our prices are lower. People don't want to do business with Chinese. They'd rather do business with the Americans. But I think you'll see it coming, countries and companies being forced to work with the Chinese.
Bill, real quick, before we let you go, what's the one thing you think the business community wants to hear from the president in the State of the Union?
That he's going to refocus on a stable economy and stable economic growth. That's the one thing they want to do. It's all 26 is all about growth. And the companies that can grow in 26, their stocks will go up. Those that don't will stagnate. Whether they beat their numbers or not, you'll see them not performing. By the way, my dream thing, Brian, before you let me go, is the Olympics. Here you saw nations from all over the world competing, totally clean, no chaos, everything, the best woman or man won. And by the way, kudos to the Norwegians. Here's a country of 9 million people that swept the medals. Fantastic. And by the way, the U.S. had its most gold medals ever. So just good, clean competition. That's what I favor. Not a crony capitalistic economy like we've seen in 25. I just favor good, hard competition. And may the best company win.
That is the right mindset to have. Bill, you've always been there for me. Thanks for being here for me again on this snowy New York City day. I'll talk to you soon. Stay safe out there.
Thank you, Brian, for having me on your show. Appreciate it.
Appreciate it. You're always welcome on. All right, that's Bill George, former Medtronic CEO. On the other side of the break, I sat down with Alex Faraday, the co-founder of one of the hottest retail brands around. We'll be right back. All right, new episode of my Opening Bid Unfiltered podcast just dropped this morning, and it is with the co-founder of one of the hottest brands in retail. That is Alex Faraday of Faraday.
The tariffs were very surprising. I think we knew there was going to be a China tariff, but the sort of global reciprocal tariffs was a shock. So we got punched in the face like a lot of people did. So that's been a lot of reworking our global supply chain and figuring out, trying to stay one step ahead of what's going to happen. So that's been a big surprise. I think outside of that, the customer and the consumer, at least where we play, has held up really well. So we had a great year last year, and so I think that when the tariffs came, I think we weren't sure what was going to kind of happen, and obviously the markets were up, and our customer did well. And I think for us, our brand specifically is. We've got a couple products that are starting to really, like, I wouldn't say they're becoming name brand, but like they're starting to hit, and we're seeing that where we have a pair of pants called the Stretch Terry 5-pocket pant, and it's just kind of like taken off.
Kind of like office icons.
Yeah, it's like a jean, but it's comfortable sweatpants, and it looks cool. And as I said, as guys can wear, they don't have to wear suits anymore. It's worked. And I just, like, we're seeing it in our department store business and our specialty store business and our online business. Like, this one pant has just taken over as like one of our best.
Wearing it the same pant every day to work.
Yeah.
Let's just be honest.
So, and that kind of happened, that sort of happens kind of out of nowhere, right? Like we invented a pant 5 years ago, and it was small, and then, it got some traction. We reworked it, and now, it was a big part of our growth last year. And a lot of that's what this business is finding what's that next icon product. What's that next thing that you're going to make that's better than anything else they can buy. And that's how, obviously we can do what we can to build the brand and build that demand, but it really comes to the product making business of the fabric and the fit. And that's what we can do, I think, really well.
Where do you make your product?
All over the world. So if you were to wear one of our t-shirts or hoodies, it's probably made in Peru.
It's really high quality.
Yeah. So that's really my brother Mike, coming from Ralph. He spent a lot of time designing fabric. So he makes a lot of the fabric, like with mills, designs a lot of the fabric, comes up with like how it feels and how it looks. So that's definitely a special advantage that we have. But it's like a chef. You go to a restaurant and anyone can make food, but like what ingredients you're using, how high quality it is, and how good do the chefs know how to make it so it tastes good. And I think that's a lot of what we do with our product. And there's clothes everywhere, but how do you make it feel that little bit different and special where someone wears it and like, oh shit, this is my Faraday. I love this Faraday shirt.
Have you had to make tough choices on quality because of tariffs?
We haven't.
Maybe using not the button, a different button, different supplier.
Yeah, I would say we haven't. I don't think we're a brand that would ever sacrifice quality, because that's one of our things that we stand up for. It's definitely forced us to maybe not play in some product categories as big as we would want to, because the tariff had just gotten, just made it kind of unsustainable. So some of that is we've had to narrow down the assortment to focus on less things, because we can kind of figure out the things we can make the margin that we need, but it's hard to do it on everything, because with a global supply chain, you get hit. So being more selective, being smarter with how we run the business. But it's like running a business, whether it's tech or any, like there's just always something. It's like
it's like whack-a-mole.
That's what I say too. It's like, and so it's like, what's next? And so I think you develop an armor to handle adversity. You build a great team around you who's helping you figure out what are all the things that are coming up. And it's up for us to, like, as a brand, to like keep staying relevant. And just the Super Bowl. So we're getting into sports now in a bigger way. And obviously for our men's business, sports is like, I don't know.
We've seen a push. I think back to Abercrombie, for example. Last year they signed a deal with the NFL. Like, how does getting into sports impact your brand?
Well, guys care about their family and sports. That's basically
that's it.
That's basically it. So And sometimes it happens because of what we like, and Mike and I, and what we're into, and it really, just as I said, sometimes it just happens. Is when the Knicks signed Brunson back in 2021. We were growing up in Jersey, like Villanova, and everyone knew, we knew Brunson well, and he grew up going to the Jersey Shore because when Rick was on the Knicks, they would go down. So I knew we had like some mutual connections, and so we signed Jalen as like our first athlete ambassador.
Perfect.
And we became friends, and so Jalen's kind of like was the liftoff point to now we have a big partnership with the Knicks every year, and then we just signed a big NBA license that we're rolling out next October, and that's like NBA, and then hopefully next it's NFL, and it's just through the relationships that that we can make. And I think one of the things about having your name on the brand is that's what one of the things I'm doing is I'm out there trying to meet people to do it. And when you associate the brand with someone like Jalen and the Knicks, and all of a sudden you got we got 6 stores in New York City, a lot of customers in New York, and they're like, oh shit, Verity's doing this thing with the Knicks, like that's cool.
Yeah.
And that's what's up to us as the stewards of the brand, is to keep figuring out what our customer wants us to be associated with.
Do you make decisions differently because your name is on the brand? I think about Under Armour. I mean, it's not Kevin Plank's business. I mean, it is his business, but his name's not on it. Nike, it's not Phil Knight. I mean, it's Nike. I mean, how do you?
I mean, it put a lot more stress on us because once you put your name on it, it can't, in our minds, it can't not succeed, because there's just, we've been saying we got to do this. We can't just like move on to another name. Like this is the only name this is our only last name. And you have to go through some of the dynamics. Like when you get like there's stuff that comes up and customers get pissed about something, and they blame, like the Verities are bad. They, it's
now you're trending in Google.
Yeah, exactly. So there's a little bit of like that association. But yeah, that really is every decision that we make, if we want to, with our North Star that we want to do this, we want Verity to become this global iconic brand, and we want to keep doing this for the rest of our lives, we got to make decisions that are right for the brand. And, we've had to turn down opportunities that can make us money. And if it doesn't feel right, we won't do it. And but I think that's the beautiful thing about founder-led brands is like, they can do it for the soul of like the authenticity of the brand and being around for a long time, and that's what's fun. That's what's fun for us. And so sports will definitely be something we continue to get into. We've always had partnerships with musicians and music because we love music too. So that's what's cool is as I've been on this journey for the last 13 years, like what I'm into and what Mike's into, and sometimes and Carrie, like that's what makes its way into the brand. And that's, I think, what our customers love about it is they're following like these real people trying to figure out how to build a brand, how to build a business, and they don't really know what they're doing, but they're figuring it out.
You recently closed a Minnesota store briefly?
Yep.
And you put out a post on LinkedIn explaining the decision. Like, take me inside of that, because I talked to a ton of CEOs, and I would say the past year they've gone quiet on speaking out on these type of issues. How did you know, like, you know what, guys, we need to take a stand. We need to like say something here and do something.
Yeah, I mean, we obviously were talking to our team about it, our full team about it, for a couple weeks. And, Tuesday morning came, we had our team meeting, and, just sort of, I just said, yes, we gotta do it. What I saw was just kind of like, it just was too much, and felt like we needed to say something for our team, for our customers, especially, we have a bunch of family who lives in Minneapolis, and it's firsthand kind of going through all of it. And, but it's not, for us, it's not, it's just for us because we thought that was the right thing to do. And that's the one benefit of owning the brand, and
your name's on it.
And so, yeah, I mean, we are a family brand. And so, people want to call it, you're trying to be political. To me, it's just, everyone believes what they believe and sees what they see. And I think that's the great thing about America is like the ability to brands or companies or people can just say what they believe, and whether someone disagrees or not, like, I think we're all one country trying to get through this.
This is Market Catalyst on Yahoo Finance. I'm Julie Hyman here broadcasting amidst the blizzard from the home office as most of the northeast coast of the United States is at a standstill with 35 million people under a blizzard warning, with snow still coming down. So with all of that said, let's take a look at what's going on in the markets here today. I did see one analysis today likening the visibility in the market to the visibility outside our windows here this morning. That is a lot of headline risk, a lot of cross currents, a lot of confusion, particularly when it comes to things like the tariffs. The Dow right now trading lower by more than 380 points. That's a decline of about 0.75%. The S&P 500 off by about a third, as is the Nasdaq. And I was just looking at the groups on the move. Energy stocks performing the best today. That's as we have some oil prices on the rise. President Trump reportedly weighing some kind of military strike against Iran on Thursday. Negotiators from the U.S. and Iran expected to gather in Geneva at their latest stab, and perhaps their last one, at coming to some kind of nuclear agreement. On the downside here today, even if energy is a bright spot, we got a lot of drags here. Financials and consumer discretionary are leading declines. We, of course, had President Trump over the weekend saying, after the Supreme Court rejected his authority to impose tariffs under IEEPA, which is one particular law and statute, he turned to some others and said he was going to impose 15% tariffs across the board. So still a lot of confusion here about what that implementation looks like, whether companies that have paid tariffs will get refunds, and what Congress may do next. We're going to talk about all of that throughout the hour. Also want to point out, as people are getting out of stocks, we are seeing a bid in gold once again here this morning. If people are concerned about what's going on in terms of risk, this is one of the places they've consistently been going, and we see gold pushing higher above $5,200 an ounce, up about 2.5%. Of course, one of the other big things to watch this week doesn't just have to do with geopolitics. It has to do with NVIDIA. The company is going to be reporting its earnings, and we will be, of course, watching those numbers very closely, not just because of NVIDIA itself, but because of the rockiness of the AI trade as of late. Right now, NVIDIA shares are trading higher by about 1.7%. They haven't done a heck of a lot this year. They're slightly higher. Antoine Schiebon is joining us now, New Street Research Technology Infrastructure Analyst. He covers NVIDIA. Antoine, it's good to see you. So, as I said, a lot seems to be riding on NVIDIA, right? As it usually is. And I've seen a lot of analysis that even if it once again comes out and knocks things out of the park, it's going to be tough for the stock to move higher. But do you agree?
Hi, Julie. Thanks for having me on the show. Yes, I mean, the demand signals are very strong. We've seen, like hyperscalers getting up capex very significantly. That resulted in material revisions to expectations. On top of that, you have OpenAI now who's increasing their revenue projections. That also means they're going to spend more cash as well. The forecast, I think, was increased by like over 2x. Now, I think you're going to have, this year supply constraints, very strong supply constraints across the board. In particular, memory is in very tight supply right now. GPUs need a lot of that memory, and I think investors will likely be watching out for any details, on how this could impact shipments and potentially margins as well this year, because memory is getting more expensive. And so the bottom line here is that we expect NVIDIA probably to grow revenues mid to high teens sequentially every quarter. This year, that's about in line with expectations. And whether NVIDIA can grow faster than that, I think will depend mostly on how much supply NVIDIA can access, how they're able to navigate these supply chain bottlenecks.
I mean, it's interesting. This has been sort of the narrative with NVIDIA for quite a while now, right? The demand is not an issue at all for as far as the eye can see. Supply has mostly been the only constraint. Is there any change of that expected? Do you think, I mean, I know that you wrote in a recent note that you think things will be strong for NVIDIA in 2026, but 2027 could see stabilization. Does that imply that demand will moderate?
Yes, I mean, I wouldn't call that a stabilization either. I think NVIDIA can still grow, beyond 2026, especially, if their shipments are limited by supply this year. That extends potentially the current cycle. But I think it's more about the growth outlook, because even in such a dominant position, NVIDIA will have to make room for alternatives. And that's also weighing on the stock, with chips like Google's Tensor processing units gaining a lot of momentum. lately, not just for Google, but also for Anthropic. Even there were like some reports that Meta would use the chip. I think the question is how much of NVIDIA's opportunity will be taken by ASICs, by these dedicated chips. And so even if the stock is relatively cheap, like it's trading on 20 times 2027 earnings, and if you compare that, to the multiples that NVIDIA has traded on historically, it's quite cheap. But I think now the question is really the pace at which NVIDIA will grow in 2027 and beyond if they make room for these alternative chips, and whether that growth will be enough to justify a re-rating.
Something else I wanted to ask you about, Antoine, is China sales, because for a good while there, analysts like yourself and your peers were just saying, not even counting any China sales in their models, right? Because it didn't seem like it was necessarily going to happen. And I've started to see some analysts maybe start to bring that back in. What do you think that picture looks like?
I think China will probably remain a source of concerns, a source of volatility in the stock. I mean, right now the situation is that H200 exports are not like forbidden for all customers. You can have like a case by case review by the administration, I mean, and of course, by the way, the administration is going to charge like 25% tariff, paid directly to the United States, for these exports. But I think, at that point, it will we don't have certainty on whether NVIDIA will be able to keep shipping those chips. Now it's on the Chinese side as well, where the Chinese authorities are requiring Chinese firms to match their NVIDIA purchases, with local AI chips as well. So I think, the situation will remain very volatile. And even if, China is a very big opportunity for NVIDIA, like it used to be 20 to 25% of their revenues historically. Jensen talked about like a 50 billion opportunity. I don't think, we should bet too much on those revenues.
So, Antoine, given that we've seen NVIDIA underperform other chip stocks, if you look at the Philadelphia Semiconductor Index, it hasn't done nearly as well as the broader group has this year to date. And given that we're used to like sort of big pronouncements from Jensen, right, and big predictions, is there any like kind of magic thing that he can say in this earnings report that would cause the stock to take off again?
He's already said a lot.
Right.
Last year he was talking about a 3 to 4 trillion opportunity, for AI infrastructure, for data center infrastructure, capex by 2030. So that still implies a lot of upside, and the street, didn't give him much credibility for that. The stock didn't really react that much on these comments. And so I think at that point, it's really about execution. It's about wait and see. It's about whether they can maintain their highly differentiated position with their GPUs, which are more flexible, which have a very strong ecosystem, while at the same time we're starting to see very strong momentum from these other chips. And so now, what happens in 2027, I think is still a bit early to tell, and I don't think he can say much that will reassure investors.
Antoine, good to see you. Thank you so much.
Thanks, Julie.
Coming up next, we'll be digging once again into the tariff question. We'll be speaking with Congressman Mike Lawler of New York next. Immediately. So now that authorization remains in place for 150 days. Let's figure out what this looks like from the congressional perspective. I want to bring in Congressman Mike Lawler. He's a House Republican. He reps New York's 17th district, which is the Hudson Valley, north of New York City. Congressman, thank you so much for joining me.
Thanks for having me.
You're fortunate to not be at home in your district today. I am here broadcasting from home in New Jersey, where it is very snowy.
I drove through the blizzard last night to get down to Washington. So,
woof. Well, I'm glad that you got there safely. It was not an easy conditions. And I did see, I was saying earlier, I saw one market analyst this morning comparing the market conditions right now to a blizzard in terms of the visibility or lack thereof. Part of that has to do with the tariffs and the sort of back and forth, and now the confusion over what the new rates are going to look like. So for you all in Congress, what's the prospect of potentially codifying the president's tariffs at this point?
Well, I think a few things. Number one, obviously, we got more clarity from the Supreme Court last week. And, frankly, Congress, over the course of 100 years, had pretty much abdicated its responsibility on the issue of tariffs and given the executive branch a lot of authority. The Supreme Court decision curtailed that in specific to the emergency declarations. But obviously, as the president and the Treasury Secretary noted, there are numerous other avenues by which they do have tariff authority. And so we saw the president exert that at the end of last week for 150 days with a 15% global tariff rate. I think what is going to need to happen as we move forward, though, is that Congress is going to have to sit down with the administration and really work through this process. I think, as I've said from the very beginning, using the tariff authority for the purpose of renegotiating trade, of forcing better trade conditions, of bringing back manufacturing and onshoring businesses, I understood and I agree with the premise of what the president was trying to do to force these countries that, frankly, have not been fair in their trade negotiations with the U.S., that have had their own tariffs, that have had their own barriers to entry, that have had price controls on U.S. goods to really renegotiate. So the question, moving forward, is how to, basically work with the administration from a congressional level to come up with the right plan moving forward.
Well, I guess that then would lead to two other questions, which is one, is this the best way to negotiate those new trade deals? And secondly, what makes it worth it? In other words, if you look at Tax Foundation estimates, before this latest Supreme Court overturning, they were looking at an average cost to U.S. households as a result of these tariffs of, I think, $1,300 for this year. Post the changes now and the new tariffs that the president has put in place, they're looking at about $700 in additional costs this year related to tariffs. And even if you view it as temporary, you well known the strain that U.S. households and some of your constituents are under. So how do you sort of sell it to them as it's worth it, right, to get some of these trade deals that you're talking about?
Well, first of all, you have to look at the economy on the whole. We were digging out of a disaster under Joe Biden and Democrats in Washington that gave us record inflation, that jacked up the cost of living on every American by several $1,000s. We have been able to start to reverse that and bring it down. We delivered the largest tax cut in American history, including, in my case, lifting the cap on salt. The average New Yorker is seeing a $4,000 tax cut as they go to file their taxes this year. Inflation is down from where it was under Biden, but there's still more work to do. You look at the economy, it is growing. Q3 growth significantly better than the prognosticators in the media and elsewhere. And the job market is growing. But of course, there is more work to do. When you look at housing, for instance, the average mortgage cost was up $1,000 a month under Joe Biden. We are reversing that. You look at healthcare costs. Obamacare has not actually produced what Democrats said it would in terms of reducing the cost of insurance premiums. We have put forth legislation that would actually bring down insurance premiums by 11%. Every Democrat voted against it. So there is a lot of work ahead of us on housing, on healthcare, on energy, on grocery prices that we continue to focus on. I think, many of the prognosticators said that tariffs would devastate the stock market. They would devastate the economy. That is not proven to be true. In fact, the stock market has continually hit record highs and is hovering around 50,000. So all of the prognostications here have not actually worked out the way many pundits have said it would. The question is, what is the right path forward to not only grow our economy, but bring manufacturing back? You look at a state like New York. New York has been devastated by manufacturing leaving the state over 40 years. Upstate New York, you have economic deserts along the I-90 corridor, precisely because of some of these policies by prior administrations that allowed manufacturing to leave the state. So the question, and the country, and the question is, how do we actually reverse that? Tariffs are a vehicle to force trade renegotiations. We have seen it with the EU. We have seen it with China. We've seen it with Japan and Korea. And there's more work to do. As I've said, if it's a permanent, tariff policy, I don't support that. But as a vehicle by which to force change and bring, onshoring of businesses back into the U.S., that is a positive step. And you've seen trillions of dollars of economic investment in the country as a result of it.
When it comes to Congress ceding power to the president, we've talked about tariffs and the possibility that you might negotiate, as you said, or come together with the White House to figure out that issue. What about a potential Iran military strike? Does Congress need to authorize such a strike? And if so, would you be prepared to vote on it?
Look, the War Powers Act requires the administration to notify Congress within 48 hours of a strike. And we have not declared war on anyone since World War II. And so, yes, Congress has a role. Congress has an oversight responsibility. I serve on the Foreign Affairs Committee. I'm chair of the Middle East and North Africa Subcommittee, so very much focused on Iran. And I am constantly in contact with the administration on the policies and decisions that are being made. But you don't, tip your hand, and you certainly don't notify the enemy in advance of a strike. And the idea from some of my colleagues that somehow the administration should be prohibited from taking action against the leading state sponsor of terrorism around the globe, the Ayatollah whose government chants death to America and has been funding Hamas, Hezbollah, funding a ballistic missiles program, their nuclear ambitions, which President Trump—
Congressman, I don't think it's an issue of whether or not the strike should happen. I think it's whether or not Congress should be involved in the decision. And as to whether we're giving them advanced notice, I mean,
well, that's exactly what you would
we
be
know
doing.
that. I mean, we're talking about it, so we know it's at least a possibility.
No, but that's exactly what you would be doing if you follow the Massey Ro Khanna strategy. The fact is, Congress is involved. We have numerous committees that deal on national security every day. We have an intelligence committee that is constantly briefed on these issues. And obviously, our leadership is in touch with the administration. But the idea that you're going to somehow try to restrict the ability of the administration to take necessary actions, I don't support. And Democrats are completely hypocritical on this point. They had no problem when Barack Obama went into Libya for 8 months and conducted an 8-month campaign. And in fact, when a War Powers resolution was brought to the floor, Chuck Schumer voted against it. Chuck Schumer said that Barack Obama had the right to go in. And so you have to be consistent in these matters. You can't just willy-nilly change your perspective because you don't like who the president of the United States is.
Well, Congressman, I don't think most people are that concerned with relitigating past conflicts. They're looking to the next one.
No, but
and
they're
so
not
I guess
consistent in their position, and that's the problem.
Then I guess my next question would be, what would be too much? In other words, where would you draw the line in an Iranian conflict? What would need congressional approval, or what would be too large a scope of conflict?
Yeah, I'm not going to engage in a hypothetical about what actions the administration will take. The fact is that Iran is a threat. They continue to be a threat. And if the administration takes action, as within Article 2 powers, then we will deal with that accordingly, in the event of a strike. But the fact is that presidents of both parties have used their Article 2 authorities for decades. And Congress, while they have a role to play, ultimately the president is the commander in chief, not Ro Khanna, not Thomas Massie, or AOC or anyone else. And so, yes, there is a balance, and we will deal with it accordingly if the administration takes action.
Congressman, thanks for your time today. Appreciate it.
Thank you.
Coming up next, we'll be speaking with a farmer in the wake of the Supreme Court decision on tariffs. You're watching Market Catalysts. I'm Julie Hyman, and we have been discussing the fallout from the Supreme Court's decision to revoke President Trump's authority to impose tariffs under a particular act, but then he turned to some other statutes in order to impose universal tariffs of 15%. One of the constituencies in the U.S. that has been hard hit by the tariffs have been farmers. And I want to bring in John Buoyed Jr., National Black Farmers Association founder and president, to talk more about this. John, it's great to see you again. Of course, the administration had announced a $12 billion aid package for farmers because of the tariffs. Now there's some sort of changes to the tariffs. Talk to me about what you all know as farmers at this point, how all of this is going to affect you.
Well, first of all, thank you for having me. And we still see this as a huge victory for me and the NBFA. We stayed the course and to tell people that the president's tariffs was bad for America's farmers, that they were hurting America's farmers, and we lost $55 billion in soybeans alone due to President Trump imposing tariffs to China. And he went to Iowa several weeks ago and said that the $12 billion for the relief package had been paid out to America's farmers, and asked those in the audience, had they received checks, and people put their hands together. Not a dime has been paid of that $12 billion. The president went from a $15 billion bailout proposal, and then he said that we would get $12 billion in December and November and December and January, February. And now I got an email that says that those payments, the sign-up period has been extended to April. So all in short, the president hasn't been truthful to the American public. We have not received the money, and that's what the president does. He says these things, and he's not held accountable. This was a hard no for the president, 6-3 from the Supreme Court, who generally rules in his favor. They said that his tariffs was illegal, and now he's trying to find other ways to put something else in another 150 days on a 10 or 15% tariffs. That's what he does. But in the short term, we won. It's a huge victory for us, and the Supreme Court, for the first time, told this president no.
So what does this mean, John, for products that you're selling into China, for example? Because it seems like the tariff rate will be, much lower than it had been under the other tariffs at 15%. So does that mean that that market is going to be more open to you all than it had been?
Well, first of all, this president has to be amenable to go out and rebuild those relationships. Those relationships are damaged with Canada. He's Canada, one of our best trading partners. The president has imposed tariffs on them and made it difficult for fertilizer and wheat and all those things to trade. Mexico, he's constantly doing something there, who's the number one purchaser of U.S. grown corn, and China, was the number one purchaser of U.S. grown soybeans. Those relationships have to be rebuilt. And just, it wasn't that long ago, the president provided $40 billion to Argentina, and they undercut us and started selling soybeans directly to China. That's going to hurt the U.S. market. And then recently, the president wants to give them more business by purchasing beef from Argentina. I'm not sure what's going on with him in Argentina, but America's farmers need help here. Farm foreclosures is up. Last year, we lost 15,000 farmers in this country, and anywhere else that would be a national crisis, a farm crisis. In the NBFA, we have 170 pending farm foreclosures that don't have the resources to meet their financial needs. If there's foundations and other companies that want to help us, please reach out because we need some help right now. This administration did not allow me to attend an all-farm meeting that he had at the White House, and there were all white farmers at the table. There were no black farmers at the table. There were no black farmers in the audience. And after I made that public, the administration didn't do anything about it, but they turned right around and told the governor of Maryland that he couldn't come to the White House. So this administration has really, they need to go out and mend some fences here, because what they've done is really made things bad for the American people. And we need someone that can lead this country, bring us back together, and mend some fences in this country.
What's the status of the soybeans, the corn, et cetera, that would have been normally bound for some of these other markets? What is it still sitting? Has it been moving? Has it actually been selling? What's been going on?
I need to explain how it affects farmers, and that's a great question. I've been farming for 43 years. This is the first time that the grain elevators were full and stopped accepting soybeans in the middle of my harvest because of the president's tariffs. So I couldn't sell my soybeans, I couldn't harvest them, and they started to pop out the pod, and I lost half of my crop. And just last week alone, I met with 2 bankers who said, hey, board, we can't extend farm operating loans to you this year as long as those tariffs are in place. That's the real hardship in what America's farmers are hearing. So I'm telling you that from a personal standpoint. A lot of people don't understand corn, wheat, and soybeans are still driven by the markets. And when the president imposed those tariffs, the markets plummeted, the prices plummeted, and we didn't have a new outlet or new markets to sell soybeans. So the market became stagnant and wasn't moving. Well, we have to wait and see how our trade partners look at the ruling, but I hope they will look at it in a favorable way, the way that we see it, that the president's tariffs were bad and harmful and hurting America's farmers.
Have you been talking to any of hearing about any of those end market customers and whether those markets are going to start to open back up now that there's been a change to the tariff rates?
Well, there's a couple of things here. One, we're trying to look at legally how farmers could recoup the monies that we lost from the tariffs based on this court ruling who said what the president doing was illegal. That's the first thing. So we're open to law firms that want to reach out to us to see how we can recoup our losses. We lost a lot of money, and not just in soybeans, but corn and wheat and other commodities and beef. The tariffs ruined our markets. That's the first thing. And we have to wait and see how our trading partners look at this. And the administration is going to have to really buckle down. I don't even know who the U.S. trade representative is, but they need to go out and mend some fences with these trading partners to see how we can get the markets moving again in the United States. That should be the #1 priority. Now, I haven't heard the president say anything about it, but he said some ugly things about those Supreme Court justices and called them fools and all sorts of names. And those justices deserve an apology, too, that he appointed to the bench, that was properly vetted and appointed to the bench to serve. He selected those 2 and he called them all of those names. It doesn't look good leadership stand-wise around the country to have the president having outbursts like that. It doesn't look good for the United States.
And he doubled down on that criticism in a tweet this morning. So indeed, he is calling those folks names and criticizing them. John Boyd Jr., National Black Farmers Association founder, president. Great to see you as always, even if the circumstances are not always ideal. Thank you.
That's right. Thank you so much.
Take care. We'll be right back here on Yahoo Finance. Comfort Systems USA is being called an under-the-radar beneficiary of the AI infrastructure trade. Who's calling it that? Corey Johnson of Epistrophe Capital Research. He's the chief market strategist there, and he spoke to Yahoo Finance's Josh Lipton.
Great to see you. You bring us a great stock story today, Corey, which I love.
Yeah.
For the uninitiated, maybe just explain this to us. Comfort Systems, let's just start at a high level. Not everyone may know the story. Tell us the story, Corey, the history, the mission.
It's it's possibly the most boring company you could imagine. They do HVAC repair and installation and electrical. And yet they found themselves in the world of AI as a key beneficiary here, because we've moved from a state, this is your last question talking about, we've moved from a place where projects are being imagined and permitted, and maybe there's semiconductors getting purchased and things, but to put these things together, to build these data centers, you need guys with wrenches and tool belts, and you need comfort systems.
So we're talking about the pipe fitters, the welders actually installing and maintaining the heating and cooling systems? That's what we mean, Corey?
Yeah, absolutely. And it's a company that I've followed for a long time. I'm not giving stock advice, but I would want to talk about this company. It's been one of my real home runs in my lifetime for this company. It's actually outperformed NVIDIA over the last 5 years and over many different time periods. It is a company that is unique in its ability to do acquisitions successfully. Right? Roll-ups like this just tend to not work, and yet this company has been very successful, and it's got a terrific culture of bringing in these groups of contractors under their tent and helping them sort of find the right work, bid on the right projects. And, 4 years ago, when I owned this company, I looked at it and it was doing great business, doing new office systems in response to COVID. When companies wanted to have a better ventilation system for better safety for the workers during the pandemic, that was a big part of their business. But technology, what they call technology, is really ramped in their business at a point at which 5 years ago, it was less than 5% of their business. Now it's really approaching, it's about 50% of their revenues right now, and growing at a fantastic clip, growing at almost doubling on a year-over-year basis, crushing Wall Street's estimates, joining the S&P 500. But it really tells us where we are in the world of AI right now. It really shows us that the build out of AI is absolutely happening. And there's questions about what the value of the AI companies is going to be. There's questions about the companies that are borrowing money to do the build out. But there is no question that the money is being spent on the build out right now. And it's to the beneficiary of Comfort Systems with the great ticker FIX.
And Comfort Systems, Corey, who would you consider their kind of primary rivals, and what do they bring to the table that's different?
I think what we see with Comfort Systems is they really are focused on this specific area. So we've got other companies that are doing broader construction of what's happening in the data center, of all the things going into a data center. You've got companies focusing specifically on liquid cooling and sort of more cutting edge things that may or may not be implemented in all these data centers. Of course, we've got the companies we talk about all the time, the NVIDIAs and the sexy chips. And is AMD going to take some of that share? And is Taiwan Semiconductor going to make these chips? But these guys are focused on the kind of boring part of this business that's doing so well and growing so quickly, not just in the number of jobs they're getting, and the way they're able to bid these jobs. They've also seen expanding margins every single quarter for the last few years. And it shows they're able to charge just a little bit more for these deals. What's also interesting for Comfort Systems is they get in and out of these projects quickly. I was going back over their 10Ks. They're what I love it when a company actually files their Q or their K with the results, like every company probably should and doesn't. These guys actually file the results. They do it after the close. Then they do the conference call the next morning, so people like me have a chance to actually go through it, work on your models, read the 10K or the 10Q, understand the right kind of questions to ask of management. What we see is some things haven't changed. Their projects tend to be completed in 6 to 9 months. So this isn't some mystery about whether or not the projects will be there a few years down the line, whether the backlog is real. They get in and out of these projects, they complete them, and they're throwing up some nice profits and free cash flow. It's a sight to behold.
Kind of a broader question for you, Corey, on this great AI infrastructure build out, which does concern some, including some guests I've had on this show, because they look at these numbers and they say, wow, how can I as an investor be certain that I'm going to really see a healthy ROI on all this historic spend? And I'm just curious how you think through that.
Well, as you know, I think we talked about it when I was with you last week. It's Oracle's another stock that I've owned that's gone in the completely opposite direction, even though it's right in the same business. Because there's a big belief out there by some investors, at least at the moment, that Oracle's contracts aren't going to come through. That somehow people are going to back out of the deals that they've struck with Oracle. I think the turnaround time matters here a lot. And with Comfort Systems, we've seen, because, as I mentioned, their turnaround time is so much shorter, those deals get done. If investors want certainty, they shouldn't be investors. It's not going to happen, right? Even T-bills are not what they used to be. But I think that what we see from some companies is their historic ability to complete fulfill the promises they've made to investors. And I think that we've certainly seen that from Comfort Systems.
Final question, Corey, just sticking with all things AI. NVIDIA earnings on deck.
Yeah.
What do you expect us to hear, Corey? What are you going to be listening for?
I mean, I think we're going to hear some of these same issues, right? We're going to be listening for, are projects getting built? Yes, they're sold out, but what does the backlog look like going forward? And are they concerned about the ability of some of these companies to finance the build out? It seems like every year we want to hear, is next year going to be real? And we thought that in 2022, and we thought that in 2023, and we thought that in 2024, and now here we are in 2026, and we're wondering, is 2027 growth really going to be real? And the market seems to need hand holding every once in a while. And I think that NVIDIA's going to be asked those kinds of questions. Is this thing real? Is the build out continuing? I also think that it's interesting to hear what's going to happen in the world of inference. It's a different issue, but NVIDIA has dominated training, and their chips are so great they can do everything. They can do inference, but they're expensive. They're power hungry, and we've seen other companies come up. There's a company called Positron that is a private company, but one I'm invested in and very focused in. They just did a deal 2 weeks ago, announcing that their valuation has gone in about 2 years from about $100 million in the private markets to over $1 billion, because they've got a low power chip that's being used for inference. And the question is whether the high powered chips from NVIDIA that are more expensive to buy and more expensive to run are still going to capture this inference game. I think that there's a place for more competition there for NVIDIA, and we'll be listening as AI goes from training models to using those models in inference, whether NVIDIA is still going to be the go-to chip for that.
Corey, as always, great to have you on the show, my friend. Enjoy the weekend.
Good to see you, bud. Thank you.
Welcome back to Yahoo Finance. I'm Brooke DePalma. Let's turn now to some of today's top trending tickers. We're watching shares of Netflix, Novo Nordisk, and Domino's Pizza. First up, let's take a look at Netflix, because the streaming giant is still in that fight to acquire Warner Brothers. But the stock under pressure this morning as Paramount Skydance is expected to increase its offer to acquire Warner Brothers, or hopes to. The 7-day window that Warner Brothers gave Paramount expires today at 11:59 p.m. Eastern. Meanwhile, Wedbush analyst Alicia Reese saying she expects volatility in Netflix shares to continue until the April shareholder vote and Netflix's first quarter earnings results. Plus, on top of this, President Trump is calling for Netflix's board member, Susan Rice, to be fired, warning that the streaming giant will pay the consequences if not. Rice, who served under both the Biden and Obama administration, recently said Democrats would push for corporate accountability if they regain power in the November midterm elections. We'll keep a close watch on that stock. But next up, let's take a look at Novo Nordisk. Its next generation weight loss drug underperformed in a clinical trial compared to the results of a weight loss drug made by rival Eli Lilly. This is yet another setback for the company as it really looks to compete for market share. Keep in mind, Novo Nordisk stock is now trading at the lowest levels since the launch of its very popular weight loss drug back in 2021, that weight loss drug being Wegovy. That stock under pressure, down nearly 16% this morning. Finally, let's take a look at Domino's Pizza. Those shares moving higher after the company posted same-store sales growth in the U.S. that beat Wall Street's expectations for both the fourth quarter and for 2025. Revenue also came in stronger than expected. That was boosted by value, like its quote-unquote best deal ever offering. It also had innovation like its stuffed crust pizza, and growth in third-party delivery services like on DoorDash that also boosted revenue for the quarter. Keep in mind, for 2026, the company does expect same-store sales to increase roughly 3% in the U.S. And this really comes as consumers continue to double down on value and price. That stock moving higher, up about 3%. Keep right here on Yahoo Finance. We'll be tracking all the latest market moves throughout the trading session.
Thanks, Brooke. And that does it for Market Catalyst on this snowy Monday in the Northeast United States. We are seeing markets sell off, accelerate to the downside here. The Nasdaq down 1.1%, but the Dow is actually leading declines today. It's down by 1.4%. And we are seeing that software sell off re-accelerate here this morning.